Fidelity will start offering Bitcoin as an investment offering in 401k accounts. Yes, Fidelity investments will allow you to invest potentially up to 20% of your retirement account in Bitcoin directly from their investment options without having to go to a separate exchange or brokerage. This is a major move for the company, which of course had called Bitcoin rat poison and other insults in the past. Now, suddenly, you can invest up to 20% of your retirement into Bitcoin directly with Fidelity. Martine, is this huge news for Bitcoin? Is it just going to turn the world upside down?
Well, it is if you're in the US, because from what I understood, we don't have a 401k in Europe. It's typically a US thing, and we can't. We have no saying in where our pension funds invest our money. So they invested in palm tree, palm oil, they invested in cluster bombs, they invested in all this stuff, which I would never, ever, ever even poke with a stick. So I think it's pretty cool that you can decide where your money goes. It also works two ways. So if you screw up, then you are the one that took the wrong decision. But being able to put some of that money, which is you have to keep in the pension funds, to be able to steer that into crypto, or in this case just Bitcoin, because the rest will probably not be around for long enough to actually last until your retirement. I think it's fantastic. I think many people will use this in the US, and for them, they're already paying into this pension fund anyway. So why not steer that a little bit into crypto? And up to 20% is quite high. I would have expected it to be up to 5% or something. So yeah, go all in 20%, that is, and we'll see. Nobody that bought Bitcoin has ever lost over a period of 4 or 5 years or longer. So I think if it's for your pension, yeah, why not? Do it. Say, do it now. This is financial advice.
And ARK, they're allowing all of their clients, not just the extremely wealthy, this incredible Bitcoin option.
I mean, we as people who, oh, I think my microphone's falling over. Sorry, where's my mic on? That's the mic. I think good start. No, I think we as Bitcoiners, we have a lot of faith in the technology, but even in saying that, oh, I'm so lame. There we go. Even in saying that, it's the hat. The hat's throwing me because I never wear hats, so I don't know what to do when I'm wearing a hat. I was just throwing my game. Even in saying that, I'm not sure putting 20% in your pension as Bitcoin, unless you understand the technology, is particularly a good idea. We obviously do, and we have a lot of faith in it. But I always say to people, if they're going to put the money into it, then it could all go to zero. And if you're relying on that for your future pension in however many years, like 20, 30, 40, 50 years, then yes, personally, I would make the bet and think, yeah, that's a fair bet, 20%. But I would prefer if the cap were a little bit lower, like 10%, maybe 5%. Because I mean, if you've got a portfolio of assets, really your percentage in a volatile asset or risky asset, which Bitcoin still is, would be lower. So yeah, I can see why there are some concerns around it. But as Martin said, in the US, you have like a much more, they have a greater tradition of people actually taking more control over their pension schemes, whereas we don't in the UK and in Europe. So maybe, within the US, people are more informed when it comes to where they're going to invest their money. So yeah, good luck to people. But as always, as much as we don't like to say it so much anymore, we used to say it a lot more, maybe like 5 years ago, we'd always say, oh, it could all go to zero, it could all go to zero. And we don't seem to say that anymore. And I think it's important that we do, because although it's proven itself to be a very strong technology, and I personally think that it won't go to zero, there is always that small possibility that it might, and people need to be prepared for that.
Of course, today, Amazon stock, a very risky asset, is down 12.5%. Amazing, unheard of. Perhaps the third time that the S&P 500 has had a stock drop as much as 10% in a single day. Almost Bitcoin-esque volatility. Dan, Eve, they say, not your keys, not your coins. No one on Fidelity will hold their own keys. Is this the end of Bitcoin as we know it?
Well, that's the downside, isn't it? To investing in it's not necessarily Bitcoin you're buying. You're buying into something that's Bitcoin indexed, and with that comes either if they're going to hold the private keys, they could lose them or screw up, or they could be there could be an insider who wipes the accounts or whatever. But then you are defeating the principle of actually holding Bitcoin, right? And you've got that third party risk. In the UK, we can, like, I think it was Hargreaves Lansdown were actually the first company that allowed us to invest in Bitcoin for our pensions, and I had the form, and in literally in like January 2017 when Bitcoin was $600, and it was like I was this close. I filled it in and I never sent it off, and just got distracted, and which is very upsetting. I'm not sure if it's even possible now, because I think they flip flopped on it after the 2018 sort of come down. But some of the critique is about the fact that Bitcoin is volatile, and pensions. They're like, oh, you don't want Bitcoin to be, you don't want to be in something that's so volatile. And they said, in this specific article, it dropped like 10% in a day. But the whole point of Bitcoin is about changing your time preference, right? It's about long term, and pensions are usually long term. Like, they're the longest term investments that you generally have. So your time frame for that, for the maturing of your pension should make up for any of the lumps and bumps that you do get. Not to mention that I think I read today that a lot of California or there's a big chunk of California pensions for a certain sector that invested in Netflix, and they're down like hundreds of millions. So that's you've still got, with traditional stocks, you've got the same issue, right? You've got the same issue that a stock can go to zero. As well as Bitcoin, maybe people saying, oh, it could go to zero unless there's something fundamentally wrong with the technology. I don't ever see it going to zero. It's tech, so it can be fixed. So I don't know. I think it's not, the going to zero thing is not a great argument compared to other stocks that have completely tanked, especially my crazy, like when I thought I was a stock trader days of just stuff that would just literally like I think Boohoo, they're doing insane now, but I bought Boohoo, and the day after they released their results and it tanked 50%. So it can happen in many different markets and stocks. So I think Bitcoin, especially in the long term, is a safe hold ultimately.
Exit question. Now that Fidelity will allow you to invest in Bitcoin directly from your retirement account, do we even need a Bitcoin spot ETF? Can't we just give that all up? Martine Wishmayer.
I don't know what the target audience for those ETFs is, but this is also for pension savings, right, Thomas? So
it's
Fidelity
about the same audience, I'd say. I'd say the people, but there's just one company in this case. So the ETF.
Yeah, more is better. I think more is better, but Fidelity is a giant in so yeah, many people will just be happy with Fidelity, but I think more is better. Those ETFs and those 401k thingies, they're not for me, but they do make it possible for a larger audience to hold or purchase Bitcoin or get invested in Bitcoin. And I think that's definitely good for Bitcoin. It means it will be here to stay. As Ben said, it might all go down to zero, but I don't think that will happen, because by the time it's 1 cent, I will buy all 21 million of them.